let's leave Snap for a moment, 30% drop. Let's talk about whether this is a Snap-specific problem or whether this is everybody, because investors at this point are saying we're going to shoot first and ask questions later. Are they right to do that?
Look, investors were very worried that TikTok was starting to eat into Snapchat, and that's just factually not true. You know, TikTok is certainly having a meaningfully negative impact on Instagram, on Facebook, even on YouTube, actually, in terms of pressuring time spent. Snapchat's not having an engagement problem. This is not an execution problem. This honestly appears to be a meaningful deterioration in the macro environment. And it's not just in the US. This is hitting Snap all around the globe. And that's what's so scary. And obviously, there's a lot of e-com and a lot of direct, a lot of D2C companies advertise on Snap. But this is across the board around the world. As you're seeing the pullback, you saw Walmart, Target. This is a real pressure on that macro environment, which impacts directly advertising. And so the real question, Becky, is forget about Snapchat today. What does this mean for Twitter? I mean, Elon Musk is buying Twitter at an enterprise value of, essentially we're going to be close to double, certainly 50% more than Twitter. It's like 42 billion versus 25 billion. You just wonder, I mean, he's locked in, but is he really going to move forward with this at the price he committed to?
So how does that saga play out? If he wants to get out of it, he's locked in, he's got this contract that he's signed. What do you think the implications are? What happens? They wind up in court, and then what?
I mean, remember, he waived his right of due diligence. He signed he signed the contract. He has no, he can't just walk away and spend $1 billion. It doesn't work like that, as you just pointed out. It feels like either he closes on his own, which certainly his tweets make it hard to believe. It feels more likely that the Twitter board has a real fiduciary duty, especially given this rapidly deteriorating macro environment. It feels like the board has a real fiduciary duty to close this deal at 54.20. And if anything, the board looks brilliant for getting this deal signed the way they did. Again, assuming they can close it, but they look pretty smart at $54 relative. I mean, Twitter today would be, well under half of where Musk is buying it, if not, 60% lower.
Just back to the macroeconomic environment. Is this a situation where CEOs are getting worried about the possibility for a recession, and then it becomes almost a self-fulfilling process where they start reining in spending on things like advertising and hiring in certain situations, and we're talking ourselves into a recession?
Are we already in a recession, I guess, is the larger question. But certainly you're seeing across the board, this is not just, there's no way this is Snapchat specific. I mean, we're hearing this over and over again throughout the space. Everyone is talking about it. And, is it hitting some of these large companies on the mobile advertising? But you're also seeing this on connected TV. You're certainly seeing a slowdown. Companies like Roku, you're seeing a slowdown across the TV universe. I mean, TV, linear TV, connected TV, they're all starting to slow meaningfully. And I think the investor fear is not so much the slowdown we're experiencing right now. I think the fear is on the other side of this, Becky, of like, if this continues, are we talking about declines by Q3 or Q4? I mean, that's where this gets really scary is how long does this last? How bad does it get? Obviously, we're seeing the slowdown, and it's going to hit everyone. I mean, there's nothing in this that appears Snapchat specific. They didn't do something to cause this. And so I think the market is right to be sort of hitting all of these companies on growing fear.
Shepard Smith here. Thanks for watching CNBC on YouTube.